Hello, this is Cynthia Fick, and this is the February 13th stock market update. Well, I love to speak with you on a day that is really exciting in the stock market, and this one is it. Today, the CPI number came out, the indication of what's going on with the consumer price index on inflation, and it was really hot. And that really spooked the market and made them think that, oh, maybe the Federal Reserve is not going to start lowering interest rates like we thought, maybe even in March. But I've been saying I thought it was going to be mid-year, if at all. So does this one-day action of a number on inflation coming out just change everything that I've been talking about with the stock market and feeling good about it? The answer is no. And I'll just go straight to the charts and show you why I believe that. So again, let's go straight to the charts. You can see that the stock market was a little due for a pullback. And sometimes when it wants to pull back, the market will look for pretty much any reason to do that. So we got it today. And again, the 2 steps forward, half step back always holds true, even in the short run. So here we have our half step back. And I wouldn't be surprised if we meet that green line or even go down to the red line. So that's what, we could have to look forward to. Now, again, I've said last week, I said, don't focus on 3 days, 5 days, 3 weeks, 5 weeks, even months. Focus on the long term, the next 1, 3, 5 year in the stock market. And why? Because again, 2 weeks ago, we got an extremely bullish signal that only has happened 4 times since 2000. So that's what we need to be focusing on. Let's look at the weekly chart on the S&P 500, and you can see that we're just, barely up to where we were before in the market. So that's, again, pretty darn normal. And the market will sometimes trade down because there's a lot of sellers who just want to break even, and that's what they're doing. So that's going to happen also in the market. And then if we look at the monthly, we can see that, remember, if this chart went back to 2000, we basically just traded sideways for about 14 years. Do you remember that? That's the secular bear market we're in. The trend that we're in now looks nothing like that. We started a secular bull market in 2009, remember? And again, doesn't mean we're not going to have corrections. We're going to have pullbacks. We're going to have bear markets. We're going to go down 35%. There's going to be, hopefully not COVID again, but there's going to be something else that makes the market pull back. And that's what, even in a secular bull market where the general trend is up, you're going to have larger pullbacks, natural, normal, healthy. It's just important that we don't break those long-term trend lines. So again, let's not focus on the one CPI number that came out hot. Let's focus on the next 1, 3, 5 years. And again, the general trend is up. If something changes, I will not be afraid to get defensive and raise cash, but I do not see that now. I don't think this is the beginning of anything longer, in the long run. So with that, I will talk to you next Tuesday, and I hope you have a wonderful Valentine's Day. Bye.